Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera kepada semua. Selamat datang ke sidang akhbar pada kali ini. Pada sidang akhbar hari ini, Bank Negara Malaysia akan berkongsi analisis kami tentang pelbagai isu dan perkara yang terkandung dalam laporan kami iaitu laporan tahunan, laporan tinjauan ekonomi dan monetary serta tinjauan kestabilan kewangan. Analisis ini merangkumi prospek pertumbuhan ekonomi dan inflasi serta keadaan kestabilan kewangan negara. Sungguh pun dalam persekitaran yang mencabar, ekonomi Malaysia telah berkembang sebanyak 3.7% pada tahun 2023. Pertumbuhan ini didorong oleh permintaan domestik yang berdaya tahan dalam keadaan pertumbuhan global yang lebih perlahan. Pada tahun 2024, ekonomi Malaysia dijangka akan bertambah baik. Permintaan domestik yang terus berkembang dan ekspor yang semakin pulih akan menyokong pertumbuhan ekonomi negara pada tahun ini. Namun begitu, prospek pertumbuhan ekonomi ini bergantung kepada beberapa risiko dalam dan juga luar negeri. Please allow me to continue in English for the benefit of our audiences. Despite the challenging operating environment, the Malaysian economy expanded by 3.7% in 2023. The growth performance was driven by resilient domestic demand amid the slower global growth. For 2024, Malaysia's economy is set to improve. We expect the continued expansion in domestic demand and the recovery in exports to support economic growth this year. The outlook, however, remains subject to downside risks emanating from both domestic and global factors. Let me begin with a quick recap on the growth performance in 2023. The Malaysian economy expanded at a moderate pace of 3.7%, and this is supported by a resilient domestic demand. After a strong recovery in 2022, domestic consumption and investment spending continued to expand in 2023, albeit at a more modest pace. You will recall that coming out of the pandemic, our economy in 2022 was boosted by the reopening effects, pent-up demand, and massive policy stimulus, resulting in growth to accelerate to 8.7%. On the external front, the slowdown in the global economy and global technology down cycle impacted manufacturing production as well as exports, which contracted by 7.9% after a double-digit growth in 2022. Looking ahead, we expect global growth to be sustained in 2024, with a growth of around 2.7% to 3.2%. We acknowledge the continued headwinds, especially from the high interest rates and geopolitics. However, resilient labour markets, trade rebound, and moderating inflation will provide crucial support to growth. What is more important to trading nations like Malaysia is the expected strong rebound in global trade activity from a low growth of 0.4% in 2023 to around 2.9 to 3.4% in 2024. The trade rebound will be driven by the tech upcycle and increase in tourism activities. Turning to the domestic economy, we expect the Malaysian economy to grow between 4% and 5% in 2024. Growth will be driven by household spending, which is underpinned by higher income growth and continued expansion in employment. Investment activities will be lifted by new and ongoing multi-year projects by both the private and public sectors, as well as implementation of projects related to the national master plans that was announced last year. The external sector is expected to benefit from the rebound in global trade and technology upcycle, and higher tourist arrivals and spending will also provide additional impetus to our growth for this year. Household spending remains the anchor of overall growth and is projected to expand at a faster pace of 5.7%. This is based on two key factors. First, as shown in the middle chart, The higher spending will be driven by better income growth, supported by stronger external demand, improving tourism activity, and higher productivity. Second, indications are that labor market conditions will remain favorable, in particular, continued employment growth and low unemployment will support household spending. As shown in the slide, unemployment rate is expected to moderate to 3.3% in 2024. In addition, targeted policy assistance to households will also lift spending. These measures include those aimed at raising employment and providing direct income support. These factors will help cushion the impact of higher cost of living. Investment is also expected to expand by 6.2%, and this is supported by new and ongoing multi-year projects in both the public and the private sectors. Of significance, realization of approved investments is well on track, with 74% of approved manufacturing projects between 2021 and 2023 currently are in various stages of implementation. Investment would also benefit from capital expenditure in areas promoted by key national master plans, such as digitalization and renewable energy. Turning to the supply side, the services and manufacturing sectors will continue to be the main driver of growth in 2024. The services sector, particularly consumer-related subsectors, will benefit from tourism activities and the favorable labor market conditions. The business-related subsectors will be supported by better trade and construction activities. Manufacturing sector is expected to grow at a stronger pace. This will be driven by expansion in the E&E cluster amid the global tech cycle rebound, and improvement in regional economies will also benefit the non-E&E exports. In addition, resource-based manufacturing will be supported by better upstream supply conditions. However, the agriculture sector is expected to register a small contraction, and this is due to the impact from El Nino and the previous year's under-fertilization of our crops. Moving to the external sector, exports are expected to turn around and record positive growth, and this is supported by the better global demand. As shown in the slide, following the slow growth in 2023, global trade is projected to rebound in 2024. Global semiconductor sales are also forecasted to grow strongly by 13.1% in 2024. This will support the recovery of Malaysia's E&E exports going forward. Furthermore, the continued recovery in tourist arrivals will also support Malaysia's travel receipts and exports of services. The current account of the balance of payments is expected to improve and record a higher surplus in 2024. And this will be driven mainly by first, the higher goods surplus, and secondly, the lower services deficit following the continued improvement in inbound tourism. The growth forecast of 4% to 5% is, however, subject to risks coming from both global and domestic factors. Downside risks include weaker than expected global growth, further escalation of geopolitical conflicts, and more severe shocks on commodity production due to extreme weather events. There are also upside risks stemming mainly from greater spillovers from the global technology upcycle and more robust tourism activity. Additional upside could also arise from faster implementation of existing and new investment projects by both the public and private sectors. Now let me turn to inflation. In 2023, headline inflation moderated to 2.5% from 3.3% in 2022, as cost conditions eased and domestic demand stabilized. Underlying inflation, as measured by core inflation, also began to trend lower in the second half of 2023. This downtrend was also observed across a range of alternative measures of underlying inflation, affirming that the disinflation was broad-based across the CPI basket. For a more in-depth look at the underlying inflation dynamics in Malaysia, please have a read of our EMR box article on underlying inflation at its core. The box article provides a detailed analysis on various underlying inflation measures used by Negara Malaysia and how these measures help to improve or to inform the setting of monetary policy in line with medium-term price stability. In terms of inflation outlook, headline inflation is expected to average between 2% and 3.5% in 2024. The wider forecast range accounts for some upside impact on inflation from the implementation of subsidy rationalization. Core inflation is expected to remain moderate in 2024, averaging between 2% and 3% for the year, broadly reflecting stable demand conditions and the contained cost pressures. Nevertheless, the outlook for inflation remains highly subject to upside risks from both domestic policy factors and external forces. Domestically, upside risks to the inflation outlook mainly stem from the impact of the implementation of domestic policy on subsidies and price controls. The overall impact to inflation will be dependent on the magnitude and timing of fuel price adjustments, as well as any additional mitigating measures, such as targeted cash transfers. Externally, continued pressures from the exchange rate and risks to global commodity prices could also fuel additional cost-push inflation. Nonetheless, weaker than expected global growth conditions could lead to more subdued global commodity prices, which would place downward pressure on domestic inflation. For 2024, monetary policy remains a focus on maintaining price stability to facilitate sustainable economic growth. Monetary policy will continue to be forward-looking and informed by the MPC's assessments on the prospects of domestic inflation and growth. Our baseline forecast is for Malaysia's growth to improve and inflation to remain moderate. This provides an appropriate environment for implementing key structural policies that are needed to further enhance Malaysia's growth potential and prospects. The effects of these policies, including the subsidy rationalization, will be assessed to discern the short to medium-term impact on both domestic inflation and growth. Beyond domestic policies, the MPC is mindful of other potential risks to domestic inflation and growth prospects, including from global factors. Monetary policy decisions will remain guided by the MPC's assessment of the balance of risk to domestic inflation and economic growth outlook. Amid the evolving economic landscape, our monetary policy approach going forward will continue to be data-driven. The MPC remains vigilant to ongoing developments and their implications to Malaysia's inflation and growth outlook. Greater policy rate increases in other countries relative to Malaysia is one of the main factors causing the depreciation of the ringgit against other currencies. If we look at the blue bars on the left, other countries have increased their interest rates more aggressively than Malaysia since 15 March 2022. Malaysia's magnitude of OPR increase is of 125 basis points and is indicated with the vertical dashed line on the chart. The orange bars on the right show the ringgit depreciating against the corresponding currencies, so we can see clearly. For example, the US has increased its policy rate by 525 basis points from 0.25% to 5.5% since 15 March 2022. Meanwhile, the OPR has only increased by 125 basis points from 1.75% to 3% over the same period. The greater magnitude of US policy rate increases compared to that of the OPR is associated with the depreciation of the ringgit against the US dollar by 10.2% as of March 15, 2024. The decline in the value of the ringgit is temporary and mainly due to external factors. Since the beginning of 2024, the ringgit has depreciated from 460 to US dollar to 479 to US dollar on February 2020. However, the ringgit has recovered to about 470 to US dollar as of March 15. Looking ahead, financial markets expect the ringgit to appreciate further into 2024 and continue on an appreciating trend as the effect of global factors subside. In fact, some analysts have projected further into 2025 and assess the ringgit to continue strengthening. And this is supported by a number of factors. First, a reduction in the US policy rate during the year is expected to ease the pressure on the ringgit and also other currencies. And in addition, the recovery in the growth of regional countries is also expected to increase inflows into the region, benefiting Malaysia and the ringgit. Furthermore, in the domestic market, the favorable economic outlook and the implementation of structural reforms are also expected to provide support to the ringgit. Nevertheless, we remain vigilant of factors that could increase the risk of a decline in the ringgit, such as China's slow growth momentum and moderation in global commodity prices. There are different factors that can affect the movements of ringgit over the short and long term. In the short term, ringgit performance is mainly affected by cyclical factors, including the interest rate differentials, fluctuations in the global economic conditions, and changing investor sentiments. However, in the long term, ringgit exchange rates are more anchored by domestic fundamental determinants. In this respect, Malaysia's economic fundamentals are sound, as evident from key indicators in 2023 and the projections for 2024. And this lends support to our assessment that the ringgit is currently undervalued. Our economy is currently diversified, with a strong external sector resilience and sound financial sector. In the longer term, structural reforms which can help to improve Malaysia's economic prospects will also provide a more enduring support to the ringgit. Nevertheless, Negara has and will continue to take concerted measures to manage any short-term pressure on the ringgit. And this includes the intensified efforts to encourage repatriation and conversion of foreign investment income by the JLCs and GLICs, stepping up discussions with corporates and investors, and monitoring conversion behavior of domestic importers, and engaging them on any unusual trends that we observe. Let me move on to credit. Credit to private non-financial sector has continued to expand at a steady pace of 4.8% in 2023. 2022, it was 4.7%. And this is in line with the continued expansion of the Malaysian economy. Notably, credit to household improved to 5.6%, supported by improvement in employment and income. Moving forward, financing conditions are expected to remain supportive of the financing needs of the economy, underpinned by banks' strong capacity and continued willingness to lend. Financing by banks and DFIs continued to support SMEs businesses' needs in 2023, with outstanding financing growing at 8.2%. In 2023, SME financing approvals and disbursements for working capital and investments has remained high due to improved business conditions and a positive economic outlook. We have also observed financing to strategic sectors growing by 23% in 2023, driven mainly by the ICT subsector. The accelerated growth is closely aligned with the National Investment Aspirations initiatives and will contribute towards increasing the value add of our SMEs business activities. Banks in Malaysia remain resilient, with healthy levels of capital and liquidity buffers that continue to support credit intermediation to the economy. We also continue to test the resilience of our financial institutions through our annual stress test exercise, where our banks are subjected to operating environment scenarios that are more severe than those observed even during the GFC and the 2020 pandemic crisis. Our stress test this year captures additional downside risks, including a liquidity stress test for our banks. The stress test results reaffirm that our banks are sound, with total capital ratio remaining well above the minimum requirement of 8% under adverse scenarios. The credit risk outlook for businesses and households continues to improve, and this is supported by sustained economic growth and the improving labor market conditions. Moving forward, borrowers' repayment capacity will continue to be supported by households and borrowers' resilient financial positions, favorable labor market conditions, and sound lending standards. Government support remain available for vulnerable households, while viable business and household borrowers will continue to have access to the loan repayment assistance. The bank continues to undertake measures to advance financial capability and inclusion with the end goal of enhancing the overall financing well-being of all Malaysians. In today's complex and dynamic financial landscape, the Financial Inclusion Framework 2023 to 2026 shifts the focus of financial inclusion from accessibility to pursuing broader developmental outcomes. The bank is developing appropriate KPIs to evaluate financial inclusion strategies against the framework's desired outcomes, which will be published this year. To achieve these outcomes, the industry's commitment and efforts to spur innovation and foster a wide range of financial choices for consumers are crucial. The measurement and evaluation of financial education initiatives are also being enhanced through the Financial Education Network, or FEN, annual baseline KPIs, and the Financial Education Measurement Evaluation Framework to foster meaningful financial inclusion. And this will enable FEN to prioritize and design financial literacy initiatives that will deliver the intended outcomes efficiently and effectively. We also see further progress made by financial institutions on the sustainability front. More than 240 billion has been committed by our banks for ESG financing up to 2027. We also saw more financial products and services being offered, such as sustainability-linked financing and protection cover for electric vehicles and solar PV units. The JC3, or the Joint Committee on Climate Change, has also actively developed tools, guidance, and frameworks for both financial institutions and businesses. This includes the SME ESG Jumpstart portal, developed last year as a one-stop center with tools and information that provide step-by-step approach for SMEs to kickstart their transition journey. The Greening Value Chain pilot was introduced last year, has trained more than 330 SMEs to begin measuring their greenhouse gas emissions, and of this, 46 SMEs have begun to report such data. There is significant potential to optimize on Islamic finance in supporting Malaysia's economic transformation and building social resilience through impactful financial solutions. And the banks remains committed to support advancement of value-based finance in the overall financial system, and this will require collective and steadfast commitment from all stakeholders to measure beyond profit and improve financial practices. Turning to the issue of financial scams, online fraud and the way scammers operate will continue to evolve. So we must be persistent in combating fraud. This requires a whole-of-nation approach, and everyone needs to play their part, including the government, financial sector, law enforcement agencies, and the users themselves, like all of us. For 2024, we have identified several initiatives to strengthen fraud prevention and enhance customer protection for victims. This will also be supported by continuous nationwide awareness program on scams. On the enforcement front, the National Fraud Portal is set to be launched by the first half of this year. The National Scam Response Center or NSRC existing capabilities will also be enhanced through process automation and robust assessment on mule accounts with the NFP. And this will enable the tracing of stolen funds and the initiation of legal actions to be made more effectively. Let me now touch on the long-term priorities. As most of us already know, there are long-standing structural issues with persistent pain points affecting Malaysia. Hence, undertaking continuous structural reforms are key in ensuring more sustainable growth and prosperity in the future. The positive growth trajectory and moderate inflation this year presents a window of opportunity for implementation of structural reforms. However, as these reforms would entail short-term costs, they must be strategically sequenced and supplemented by targeted assistance to minimize the burden on households and businesses. These reforms, which should be prioritized, include: first, expedite the implementation of the various master plans that was announced last year. Develop a future-ready workforce through the labor market reforms. Strengthen social protection programs and remain steadfast on commitment in undertaking fiscal reforms. The execution of these reforms will raise our competitiveness, ensure more sustainable growth, and improve our standard of living. Let me just touch on the bank's financial position last year. The bank's financial position continued to remain sound. For the financial year ended December 2023, the bank recorded a net profit of 7.16 billion ringgit, an increase of 2.5% as compared to the year 2022. Of this, 2.8 billion ringgit will be paid as dividend to the government. And in terms of assets, international reserves continue to account for the bulk of the assets at 83%. Finally, I would like to draw your attention to our box articles. There are a few here which I would like to highlight as they provide insights into key interesting topics. The first two articles on monetary policy and inflation are closely related to the bank's mandate and will give greater understanding on the bank's policy formulation. The article on sustainability will be an important one, especially for businesses to gain a deeper understanding of key initiatives the financial sector has introduced to assist SMEs to transition. Meanwhile, the article on realizing value-based intermediation vision 5 years after introduction, it delves deeper into the progress of the implementation of VBI since its introduction. We have actually a total of 16 analytical box articles this year across our 3 publications. Please do give them a read, and you can find them on our website. I've reached the end of my presentation, so allow me to summarize. The Malaysian economy is projected to grow by 4 to 5% in 2024, supported by resilient domestic demand. Meanwhile, the recovery in exports will be underpinned by stronger global trade, technology upcycle, and further improvement in tourism activity. Headline and core inflation are expected to average between 2% and 3.5%, and 2% and 3% respectively. The banking sector's capital and liquidity positions remain strong and continue to support economic activities. Finally, With the positive macroeconomic prospects, this presents a window of opportunity to undertake reforms. It will be imperative to prioritize and implement the key structural reforms to ensure growth in the Malaysian economy becomes stronger and more sustained going forward. Thank you for all your attention. My team and I will be very pleased to taking your questions. Thank you very much.
Hi, thank you very much for the presentation. My name is Seiichi Oshima from GG Press, a Japanese news agency. I have 3 questions. One is that how do you measure the price of gasoline in CPI when the government, gasoline or petrol, when the government moves to targeted subsidy, because the actual price people will pay will be different, could be different by the income. And the second question is, the government is, as far as I hear, is developing a new measure of inflation, cost of living, inflation index. And do you take that new, suppose that index is developed, will you consider it as one of your elements in considering your financial policy? And the third is, the government is trying to raise the labor participation rate of women by 5%. How do you think of its influence on trend growth rate, on the GDP growth rate of Malaysia?
Thank you, Seiichi. I think, Governor, we will take these 3 questions since it's quite a fair bit. The first question is, how will we measure the different prices in petrol when the subsidy rationalization come in? How would that affect our measurement in CPI? The second question is whether or not our MP, monetary policy going forward, will also consider the inflation index developed by the government when it comes in place. And the third question is the impact on growth when labor participation rate of women is raised.
Thank you, Seiichi, for the question. I think we'll start with these 3 questions. I think in terms of how do we see in terms of price of fuel when we move to targeted subsidy, what we have done is that if you look in terms of the inflation projection of 2 to 3.5%, you see a big range there. The reason for that is to take into account the implementation of the subsidy rationalization. So that's where I think it's already been incorporated there somewhat. Second, in terms of how do we measure the measure on the cost of living that's been developed by DOSM, we welcome that certainly, and that's a very good measure. And once it's there, it will definitely be an important element that we will also look into in terms of formulating our relevant policies. And third, in terms of the labor participation, especially for women, we have seen an increase in terms of labor participation. In fact, look at the overall labor participation in Malaysia, it is at the highest now. It's about 70%. And we have seen increasing trend for both women as well. This is something that's very positive. And I think if you have a higher woman participation in the labor market, that will contribute positively to our growth as well. Thank you.
Thank you, Governor. May I invite another round of questions? The gentleman there on the right.
Hi, I'm Disheng from Nanyang. I have a follow-up question on the inflation. Since there are uncertainties on the inflation outlook, and could a higher inflation dampen the growth trajectory of private consumption? And would this cause the GDP growth target to miss again? Thank you.
Thank you. May I invite, I think Anissa, you had a question as well in the front.
Hi, Governor. Reading the forward of the report, I see that you outlined how BNM's monetary policy action may be necessary this year on account of the subsidy reforms being played out. So I would like to know the base point scenario. Do you expect rates to remain unchanged this year? And also, my next question is, how lasting will the impact from the subsidy reforms be on inflation? And another question, sorry, you mentioned that while the rationalization of subsidies may have short-term implications on growth and inflation, well-planned and well-executed implementation strategies alongside targeted cash assistance can help mitigate these effects. That's from your report. So could you elaborate more on what it is? What do you mean by well-planned and well-executed strategies? What's your assessment of how the government is unwinding these blanket subsidies? Thank you.
Thank you, Anissa. Governor, I think we'll take these questions. Yeah.
I think first, from Kishan, a question in regard to higher inflation and the impact on the GDP. In our projection of between 4 to 5% growth for this year, we have taken into consideration the range of inflation that we have projected, where it has taken into consideration the potential impact from the implementation of the subsidy rationalization. So it's already being impacted there. In fact, we have also taken into account all those rationalization that has been taken, reform that has been announced, for example, like the electricity tariff, the water tariff, and also the taxes. So that has been incorporated in our projection already. And it's not to your question in terms of monetary policy. I think this is where, with regard to monetary policy formulation, our focus is in terms of looking at the outlook for growth and inflation. So that's the main focus for monetary policy decision making. And it's where we look at all the relevant data. In terms of the subsidy rationalization, and as we have seen in the past, when we have certain reform measures, they are temporary in nature, and that may not require monetary policy intervention. And similarly, in the case of subsidy rationalization, if it's being undertaken, the impact on inflation will be for about a year. That is normally transition. And whenever there's transition kind of like impact, normally monetary policy does not need to react. Nevertheless, we will remain vigilant on this, and we need to look in terms of the data that comes in, and we need to see in terms of whether there are any de-anchoring of inflation, or where we see in terms of demand pressure. Only such instances will require monetary policy intervention. For example, you would have seen during the pandemic, when there was supply chain issue, inflation went up, but that was more the supply shock impact. So that does not require monetary policy intervention, and we did not intervene. We came in with monetary policy adjustments only in 2022, after we have reopened, and where we see there's some demand pressure coming in. So that's where monetary policy is relevant. You must understand that monetary policy is a demand tool management, and it is a blunt tool. So that's why I think it needs to be used appropriately. So we will definitely continue to remain vigilant and assess as the data comes in. And then second, you asked about the timeline. I think I answered that as well, about a year normally, and its transition. And in terms of what do we mean by well-planned and sequence? So this is a big reform agenda that we're talking about, and there are many of them. So that's why we have seen that the government has sequenced the reform measures by starting with the electricity tariff, and then we have seen the water, and then implementation of the taxes. And even for the fuel subsidy rationalization, it is something that must be properly planned, because it comes with two perspectives. Number one is adjustment in terms of the price itself. And secondly, as the government has said that we are moving towards targeted subsidy, meaning how do you provide income transfer to the targeted group that is the most affected by the policy. So that's where it needs to be calibrated carefully to make sure that it is done in a careful manner, and also in terms of a well-sequenced manner to minimize the impact on growth and also inflation. So that's what we meant by well-sequenced and well-planned.
Thank you, Governor. Question for the gentleman in red.
Hi, Governor. Adam Aziz from The Edge.
Yes.
I have two questions. Can you elaborate a bit more about this window of opportunity that Malaysia has to undertake these structural reforms? And number two, you mentioned about financial inclusion. There's something else that BNM was looking at, which is the Consumer Credit Act. What's the update on that? Parties are calling for the Act's enactment in light of the recent court case involving a credit rating agency, which raised its ability to generate the credit score. So will the Act spell out details on whether CRAs can do that? Will it spell out details on whether they are supposed to do, whether they are allowed to do that, and in light of the protection of those are being rated? Thank you.
Thank you, Adam. Maybe I can invite another question from the floor.
Hazwan dari Berita Harian. Saya ada dua soalan. Yang pertama mengenai kadar hutang isi rumah di Malaysia yang berjumlah 1.53 trilion lah, seperti yang dimaklumkan oleh Menteri Kewangan semalam. Soalan saya, adakah paras ini sesuatu yang perlu dibimbangkan atau dalam keadaan terkawal? Yang kedua mengenai trade balance yang Malaysia yang semakin kecil. Seperti yang kita tahu, Dawson pada Februari lepas mengatakan trade balance kita merosot 44% kepada hanya 10.9 bilion. Jika trend ini berterusan, seperti import lebih tinggi daripada ekspor, mungkin boleh menjejaskan keyakinan ringgit, ataupun untuk jangka masa lama boleh mengakibatkan balance of payment crisis seperti di Sri Lanka. So boleh minta pandangan daripada Bank Negara. Terima kasih.
Thank you, Governor.
We'll take this first. I think Adam, from your question in terms of what do we mean by window opportunity. Of course, reform always painful, but it's critical and important. And there's always never a best time to undertake reform. But why we said this time around, this provides a very good window opportunity for two reasons. Number one is that you see in terms of the projection of growth that we are seeing for this year. We're seeing growth of between 4 to 5%. So that is a very reasonably good level of growth. So we have growth. Second is that inflation is also moderating. At 2.5% in 2023, and this year, although we projected it to be between 2 to 3.5%, is because of the we incorporate the potential implementation of the subsidization. So it is still a moderating trend, and it is stable. So we have a stable inflation environment, you have a positive economic growth environment, so that gives you the good window opportunity for you to undertake reforms. And reform has started. As I mentioned just now, that we have seen the electric tariff revision, water tariff, and also in terms of some of the taxes. Second, in terms of financial inclusion, I will get DG Jessica to also come in later on in terms of latest update on the CCA. Yes, CCA is one of the important initiatives that we are undertaking to ensure that consumers are protected in terms of from credits. So that's very critical, and I think the Act is going to Parliament, and perhaps DG Jessica will be able to explain on this shortly. But let me just touch on the household debt, which I also would ask Jessica to elaborate further. Household debt, Hazwan, yes, it is pada tahap yang kita perlu perhati dengan rapat, dengan dekat. Walaupun dia berada pada tahap yang tinggi, namun apa yang kita telah lakukan sebelum ini adalah dengan memastikan, pertama, peminjam, bila mereka meminjam, mereka faham apakah impak ke atas mereka dan juga kemampuan untuk mereka membayar pinjaman tersebut untuk jangka masa hadapan. So all this are captured dalam kita punya guideline that we issue in terms of responsible lending by the banks. That's on the bank side. Kedua, we continue with our financial education to make the borrowers know how to assess in terms of their own capacity to undertake borrowings. So that's from the borrower's perspective. Nevertheless, from the financial stability perspective, we see this number is manageable because in terms of the impairment rate in Malaysia is still very low. Despite kita dah tak ada lagi bantuan secara besar, in terms of repayment assistance too, we only have targeted now, but we have seen that the impairment ratio in Malaysia has been stable at about 1.6%. So not so much a concern from stability, but we have to be vigilant and continue to monitor this. Perhaps I think the DHS can also add on this shortly in terms of what are the details at the household level. Let me just come back for that. Sorry, let me just finish off before I pass to the DHS in terms of the trade balance. As you can see in the slide that we highlighted, we shared just now, the current account balance will improve this year to between 1.8 to 2.8% of GDP this year. Last year was 1.2%. And what are the factors that's going to support this? Pertama, the global trade improvement. For example, this year we expect global trade to be between 2.9 to 3.4% to grow, whereas last year it was 0.4% sahaja. So this will definitely support in terms of current account balance. Kedua, the global tap up cycle. This is also something that akan menyumbang ke arah peningkatan dalam ekspor kita dan juga akan membantu pengukuhan current account balance. Contohnya, di WSTS dia project the electronic trade to increase by 13.1%. So this is very, very big. Ketiga, as a net commodity exporter, the higher commodity prices will also provide support to the commodity exports earnings. So that will also increase our earnings. And keempat, what we have been saying many times is that the tourism will also increase this year, and it's something that we can also do more to enhance the number or increase the number of tourism that comes into the country. So all these four will help to support in terms of the current account balance. Maybe let me pass to the DJS, and then if the DJ Sham want to add anything on current account balance, can also come in. Go ahead, DJS.
Thank you, Governor. So on the CCA, it's quite advanced. It's in the stages of review of the bill already, so we expect the bill to be brought to Parliament this year. That's the target. Just to clarify as well, it will address consumer lending activities. So especially those yang sekarang ni not under Bank Negara or SC, they'll be brought under the bill. On credit reporting, agencies macam CTOS, they are not directly something that the Act will address because CTOS is under Credit Reporting Act, which is administered by MOF sekarang ni. So the issue of whether CTOS can produce credit scores ni, this is something that the court will decide. It's before the court sekarang ni lah. But I think it's probably important to keep in mind that credit scores have a useful purpose. In other jurisdictions as well, you know, retail stores can use it, property owners use it to assess whether or not somebody they want to rent to or provide credit line to, you know, is credit worthy. And I think for the individual also, the information, the credit score can help individuals to take actions to improve their own credit worthiness and get better financial access. On household debt, I think in addition to what Governor has mentioned, maybe just to add that, you know, share of borrowings under repayment assistance also has continued to come down for households. So, and we also track, for example, the flow of newly distressed borrowers, and we're seeing that remains very low. So, you know, those are some of the additional indicators. Thanks, Governor.
Yeah, just to add that on the current account balance, first of all, we are not and will not be facing a balance of payment crisis. As Governor explained, we expect that Malaysia will continue to have a current account balance surplus in 2024. In fact, if you look at Malaysia, we have been having a current account surplus for the past almost 28 years. In addition to export recovery that we forecast, the tourism sector is a big foreign exchange earner for the country. Last year, 20.1 million tourists came to Malaysia. This year, the ministry is expecting about 27 million tourists. And with the visa liberalization for Chinese and Indian tourists, and with the ringgit where it is, so Malaysia continues to be a very attractive tourist destination. So in fact, all of us can help to promote Malaysia, to make Malaysia more attractive. Thank you.
Thank you, Governor. Thank you, DGs. May I invite another round of questions from the media? Anissa and the gentleman on.
Hi, I have a few questions. Do you have the amount of fund inflows that you received since you began your coordinated actions to support the ringgit in late February? That includes, urging GLICs to repatriate their foreign earnings. Second is, did you spend an extraordinary or unusually large amount to defend the ringgit since February when it weakened? And lastly, how important is the impact of structural reforms or the lack of it on the ringgit's performance?
Thank you, Anissa.
Hello. Good morning, Governor and Negara team. Emir Zainal from The Edge. My questions, I've got a couple questions on ringgit as well, maybe similar to Anissa's questions. In your last MPC statement, BNM mentioned that the government and central bank are encouraging repatriation and conversion of foreign investment income by GLC and GLICs. May I know how much has been repatriated and which GLICs are involved? And if you could explain how this works. And how is this move affecting their investment portfolio? A second question on ringgit, you mentioned that ringgit is undervalued. From Negara point of view, what is an appropriate value for the ringgit against dollar and other regional currencies? Thank you.
Thank you.
Yeah, Amanda from TV3 also got to do with the ringgit. We're going to implement like some concrete policy where, like I think in 2016, where 75% of in terms of the aspect of the monitoring the conversion of export proceeds, where towards ringgit. Are you going to implement a concrete one measure? Thanks.
Thank you, Amanda. Governor?
Thank you. I think there's a lot of questions there. I will answer some of them. I also invite my colleagues, Jana, to also come in on certain of the questions that are being asked. I think first, Anissa, you asked in terms of, amount of funds inflows that we have seen. We have seen positive outcome from the coordinated actions. Flows are coming in, and we saw immediate impact on market flows since 26 February, and there's increased demand for ringgit. So, and then we can also see that since the announcement of the actions on 26 February, the ringgit USD has appreciated by 1.3%. In fact, we were among the highest appreciation in the region during that time. And our NER strengthened 1.1%. And the forex turnover volume, the daily average of 18.1 billion US dollar. So that is what are the things that we have seen, the outcome from the action. And we have also seen a positive response from the forex traders. And most of them agree ringgit is undervalued. And they appear more willing to hold on to their ringgit positions for longer. And we also have had many engagements, 50 engagements with the GLC cliques and corporates in the past month. And ultimately, what we want to do is that, I think these are all short-term measures that we are doing. But more importantly, the longer-term measures is that you mentioned about structural reforms. So that's definitely very important. In terms of whether it involves a large amount of intervention, of course, Negara is present in the market. And our objective of being in the market is to ensure that there's orderly functioning of the financial market, and also there's no excessive volatility in the market itself. Maybe later I will invite Jana to come in to explain on this. And let me just complete on the structural reform a bit. How important is structural reform? I think what we are doing now, I think this addressing the cyclical or the short-term developments that we are seeing from the sentiment and everything in terms of our normal operations, our presence in the market. Secondly, in terms of all this coordinated action that we are taking with the government, the communications that we are doing, the engagement with the businesses, the investors, the exporters, the importers. So these are short-term measures. But over the long run, so that's where structural reform is the one that will be an important element that will provide support to the ringgit I would say this will provide a more enduring support to the ringgit. So this is very important. There's no two way about it. So that's very critical in terms of structural reform. Let me invite DJ Anand to comment in terms of the question that you raised just now, and later on I come into the other points. Go ahead.
Thank you, Governor. Maybe just to comment that firstly, we're not able to share who the institutions are and what volumes have they brought back, but they have been able to bring back quite consistently on a daily basis, and this also includes the amount that Bank Negara itself would also intervene in the market to provide that liquidity. Maybe just to add, I think Governor has said much on this as well. But as far as the conversion of export proceeds, we are engaging the corporates, and this is what we're doing right now. We're engaging the exporters as well as importers for that matter, but in particular for the exporters to encourage them to convert their export proceeds. So there has been quite extensive effort already on our part to engage with the corporates. So let's see how this works. Thank you, Governor.
Maybe if I can just add, I think you asked a question in terms of whether the encouragement for them to repatriate, this will have an impact in terms of the portfolio. Let me just be very clear here. What we are encouraging is for them to repatriate their realized income. So that's all that we're asking for. And there's a question in terms of what do we mean when we say ringgit is undervalued. I think I've explained this in terms of number one is that ringgit should reflect our fundamental, and our fundamental is strong in terms of we have diversified economic structure. We have a diversified export market, not just in terms of who do we export to, but also more importantly, the trading partners and the products as diversified as well. And we have a strong financial sector that can continue to provide financing to the economy, for economy to grow. We have a stable inflation environment, and we have strong prospect. So that is in terms of fundamental of the economy. Second is that I also touched that prospects of the economy moving forward is also very positive. We project growth to be between 4-5% this year. So all this tells that where the ringgit is now today, it is not reflective of the fundamentals and the prospects of the economy. To your questions in terms of what is the fair value, I think this is a very technical point. And this is done actually by using various models. There are many models out there. In fact, not just us, but also the analysts, banking sector analysts, they also do this model to find out in terms of the fair value of the ringgit. And you have seen their perspective of this, and because they publish all those reports. As far as we're concerned, the models that we use and the outcome that we get is more for our internal consumption. And we don't publish that. There are many reasons for this. Because, as models, they're just predictive. Secondly is that there are many variables that goes into that, and there's many qualifiers that goes into that as well. So we certainly don't want to be seen as, if we state as a fair value, as if we are targeting a certain value for the ringgit. So that's on the fair value of the ringgit. I will invite the Jisham or the Ejifra to also come in on this later on. But I want to just touch on the questions about the conversion rate amendment that you raised. I think DJ Anand has already mentioned this. What we are doing now is that we are closely monitoring the holdings of the foreign currencies by Malaysian corporates, exporters and importers. We have observed actually an increase in foreign currency holdings recently. And specifically, we observe an increasing trend by certain exporters taking time to convert their export proceeds, importers front-loading the purchases of foreign currency, and corporates not converting their overseas investment income. And this behavior has contributed to the imbalances in the forex market. So that's where we meet them, we engage with them very closely, and would like to strongly urge all the businesses across all sectors to do their part to ensure that their export proceeds and overseas investment income are repatriated and converted in a timely manner. Bank Negara will continue to monitor the build-up of the foreign currency account balance and the behavior of the businesses. So that's what I would share with you on that, Amanda. Thank you. Shall I come in on the fair value?
Yeah, just to add on the fair value, internally, we have a number of ways or models that we use to estimate the so-called fair value or equilibrium value of the exchange rate. And all these measures or models that we have show consistently that the ringgit at the current level is undervalued. My second point is about reforms. You mentioned about reforms. I think the important thing about reforms is that it will lead to higher productive capacity of the economy. It will help to improve the competitiveness of our economy, and this will contribute to not only create greater jobs, sustain our economic growth, but also help to gain greater confidence and support to the ringgit. Thank you.
Thank you, Governor. Thank you, DG. Governor, we are already at 12:02 p.m. Would you like to deliver your closing remarks?
Since there's no more questions, first of all, thank you for all your questions. Before I conclude the session today, I would like to invite you to the Sasana Symposium that will be held on the 12th and 13th of June. And this year, the symposium will be a 2-day event, offering an additional avenue for the public, including you, the media, to engage in discussions on our work, including some of the box articles that we published today. Participants will include industry leaders and experts who will engage on contemporary issues related to monetary policy, ringgit, digitalization, social safety nets, Islamic finance, and sustainability. You'll also get a chance to meet the staff of the bank and not just the senior management, all of us here. You get to see the author of the box article and you can ask them more detailed questions, even about the model, if you wish. You also get to we'll really look forward to seeing you at the symposium. So that's number one. Second is that, as announced by the Prime Minister, we will also like to invite you to the Global Forum on Islamic Economics and Finance that will be held on the 28th and 29th of May this year. This event will be organized in collaboration with the Ministry of Finance, other financial regulators, and international organizations. And this forum aspires to gather policymakers, business leaders, and financial service providers from around the world to build and realize a future together where Islamic economics and finance will be a key solution driving tangible and substantive results in generating shared prosperity with equity, consistent with the economic framework. Finally, I hope it's still not too late to wish those of you observing Ramadan, Selamat Berpuasa to everyone. And also as we gear up for Hari Raya, we will encourage everyone to use Fit Notes or e-Duit for Duit Raya. Fit Notes are used notes which meet the acceptable quality standards for recirculation. They are good quality, I have to assure you on that. It looks the same, feels the same, and more importantly, it's valued the same by the recipient, no matter the amount given. With that, thank you and see you at our next event.